I'm about to show you something that almost everybody gets completely backwards. Day trading isn't the opposite of investing. In a lot of ways, it's actually the cheat code that makes you a better investor. Because once you understand how price really moves, where it traps people, where it builds strength, where it exhausts, suddenly long-term investing stops feeling random. You stop buying blindly, you stop panic selling dips, and your entire wealth-building strategy becomes clearer. So today I want to break down the true relationship between investors, swing traders, and day traders, and why the skills overlap way more than people think, even if the holding periods are completely different. People love to put these three into different boxes. Investors are the patient ones, swing traders are the strategists, and day traders are just caffeine-powered degenerates staring at charts all day. But here's the truth. All three approaches use the same exact market principles. They just use them on different time frames. That's it. So let's break it down. Investors, they hold for years, focus on long-term cycles. They want consistent compounding and don't care about tiny pullback. Swing traders hold for days or weeks. They use a mix of technicals and fundamentals. They're trying to capture medium-sized moves. And day traders, on the other hand, are in and out within minutes or hours, rely mostly on technical analysis, and need precise timing and emotional control. Different goals, different speeds, but the same chart, same behavior, and same market structure. A trend is still a trend. Support is still support. Exhaustion is exhaustion, and fear is fear. Timeframes may change, but the psychology doesn't. Next, I want to cover how technical analysis is the universal language. Here's what nobody explains. Whether you're buying Apple for the next 10 years or taking a 5-minute scalp on ES, you're reading the exact same behavior. Higher highs and higher lows, pullbacks to structure, liquidity grabs, sentiment shifts, momentum exhaustion. The only thing that changes is the time frame. Investors look at the weekly, swing traders look at the daily and 4-hour, day traders look at the 1-minute and 5-minute. But again, a trend is a trend, zoomed out or zoomed in. That's why learning basic technical analysis makes you so much of a better investor. You suddenly understand when the market is stretched, and when it's exhausted, when it's showing strength, and when it's oversold. When things are on true discount and versus fake discount, that's the cheat code. So people always ask me, do you invest or are you just a day trader? I invest, but only when there's blood in the streets. When markets panic, when news is screaming, and stocks are on fire sale, that's when I back up the truck. And the two biggest long-term wins of my life came from the exact same mindset. Number one being the COVID crash. Everything dropped 30 to 50% in weeks. A lot of people were panicking, but I was watching weekly levels, exhaustion, and sentiment shift. And when things stabilized, I stepped in big. That was one of my best long-term entries of my career thus far. The second and more recent was the Trump tariff crash. Same story. Overreaction, emotional panic, nothing structurally broken. I sized in heavy and held. Day trading gave me the confidence and understanding when the market was exhausted, where it should stabilize, and why panic dips are such amazing opportunities. That's what allowed me to buy when everybody else was terrified. Day trading does make you a better investor. Although you don't have to actively day trade, the skills that you learn will make you dramatically better at investing. Why do you ask? Because day trading teaches you most things that you'll never learn as an investor. How price actually behaves, where retail gets trapped, how liquidity works, how trends build and break, how to wait for confirmation, how to avoid chasing, how to define your risk. Investors who understand even 10% of these concepts buy better, panic less, hold with more confidence, and get better long-term returns. And the best part, you don't have to day trade every day. You just need the skill set. So let's talk fundamentals. As a day trader, I don't care. Unless I'm trading small cap and looking for dilution. That's a totally different topic. And as a swing trader, I care a little. As an investor, yeah, fundamentals really do matter, but not as much as people pretend. You don't need to be an accountant. You don't need to analyze every ratio. For most new investors, basic fundamentals combined with solid technicals and a general read on sentiment is more than enough. If you do want to learn more about fundamentals, How to Make Money in Stocks by William J. O'Neill is a solid introduction. But don't get lost in the weeds. At the end of the day, price tells the real story. Now I want to touch on something people rarely talk about. Most investors have no idea what they're paying in fees. Let me be clear. Money managers and advisors are providing a service. They should be paid for that service. But your returns are not guaranteed, and their fees most certainly are. Many advisors charge a percentage of your entire portfolio annually. Then the funds they put you in have their own built-in fees layered on top. So while your portfolio might go up or down, the fees always get paid. And over 10, 20, 30 years, those fees add up, and they quietly eat into your returns. That's why I always say nobody cares more about your money than you do. Not the bank, not the advisor, not the wealth manager. The bank isn't your friend, it's big business, and it gets paid whether you win or lose. That is why taking an active role in your money, even if you never trade, is so important. So whether you're an investor, swing trader, or day trader, you're studying the same market, the same structure, the same psychology. The time frame changes, but the principles don't. If you learn basic technicals, if you understand how price moves, and if you stay patient when fear hits, you're already ahead of 90% of the other people. Day trading gives you timing, investing gives you wealth, swing trading lives in the middle. There's no right way, just the way that fits your life. If you made it this far, drop a comment. Are you an investor, a swing trader, or a day trader? I'm genuinely curious, and I'll reply to as many as I can. And with that, I'll see you in the next one.